Well, hey, we're going to go ahead and get started. Thanks everybody who's joining us and taking advantage of listening to a friend and an expert in the field of taxes. Dave Stone is with us today, and he is the owner of Tartan Wealth Management and also a practicing CPA. So he has agreed just to join us today and just hopefully give you all some insight on some ways that you can really use this 1099 status to your advantage. So I'm going to turn it over to Dave, and I think we're going to, he and I have talked, and he's going to go through some of the advantages of being a 1099 employee and some of the requirements of being a 1099 employee. And so we have a couple areas that we want him to touch on, but then we'll open it up to some opportunities for you all to ask Dave any questions, and we'll wrap things up here in just about in a half an hour at the max.
Great,
So,
Cindy. And start. Just to start out, I would say that, obviously there's two ways you can get paid for a job. One is, through W-2 wages, and that one is where the company pays you salary. And at the end of the year, you get W-2, and there's some withholding taxes that are taken out of that. And at the end of the day, come tax time, it's, fairly simple, but, not very flexible as far as what you can deduct for expenses that you incur as an employee. So a 1099 is another way to get paid as an employee, as a contractor, I would say, which is different than an employee. And the sky is the limit as far as opportunities to deduct bona fide business expenses. So, for example, somebody was a W-2 employee, they would not be able to deduct their home office expenses. That's not something that most people know. They assume they have an office at home, they're paid a W-2, that they can deduct their home office, but they cannot. So a 1099 status or an independent contractor, you are able to deduct home office expenses, and that would be, there's two ways to do that, and I won't go into a lot of detail on those, but one is if your office that you have, assuming everyone has a space in their home that would be, the quote unquote office, you can deduct the proportionate share of the expenses that are incurred by that square footage of your home. For example, if the office was, let's say, 10% of the overall square footage of your home, then you could deduct 10% of all of your household expenses, such as utilities, such as mortgage interest, such as any, water, trash collection. Any of that stuff is deemed to be deductible if your home office is, again, in that example, 10% of your overall square footage. Now, in lieu of doing all the math, there's a pretty quick sort of alternative to that, and that is just taking a standard, which is about $1,500 deduction for your home office, which most people, it's probably going to be a wash pretty close to whether that's more beneficial or the 10%. But to make it easy, without having to do any math, without having to get your tax preparer all the expenses of your home, a lot of people just do the standard home office deduction. So that, and then on top of that, any supplies that you buy for the office. So if you're buying, Again, basic office supplies are deductible in full. If you have, printer that maybe is used in your business, that is deductible completely. Um, if you do sort of, let's say, continuing education or some type of education classes, the cost of those are deductible, as well as I don't know if anybody has any licensing requirements, but again, things like that would be deductible. But the biggest thing, probably for most of you on this call, is the mileage deduction that is available to contractors, 1099 personnel. So the mileage deductions are basically, it's going to be a per mile deduction. So as of today, and I say it that way because that does change from time to time. The IRS will change that, and a lot of times it will change if the cost of gasoline goes way up or way down. They change it during the year. So the last few years it's been a certain rate for half the year, and then the second half of the year it's changed. So for right now, as of as of 2023 today, it's 65.5 cents a mile. So any mileage you have between your home and your home office, we'll say, to a facility or to see a client of any sort, that is deductible at 65.5 cents a mile. The requirement for that, that I will stress, is you are supposed to keep, I guess, what's called a mileage log, or I would say most people do it on an app. And I believe there's a number of apps out there that are available to help you track mileage. And I don't know of any that I can tell you to try. I would just try some, see what you like. At the end of the day, what you need to keep track of is what was your starting mileage that day on your odometer, and then what was your ending mileage that day? Where did you go? And then at the end of the day, there'll be some basic math that'll tell you, okay, I drove 28 miles today for business. And over the course of the year, you'll compile all that. And then at the end of the year, when it's time to do your tax returns, your tax preparer will take the information, and they will complete what's called a Schedule C, which is part of your tax return. It's a schedule. It's a schedule on your 1040, which all of us file a 1040. So anybody that has any income at all has a 1040 return they file, and then there are schedules that you would complete based on your employment, based on any dividends or interest, things like that. So a Schedule C is self-employment income. So what will happen at the end of the year, you or your tax person or your significant other, in some cases, because we all know men are pretty good at math, but I'm being sexist to that, but two, actually I'm speaking for my household, so I'll say that, and my wife won't disagree that she turns all this over to me. So what you want to do throughout the course of the year, keep very detailed records of all your expenses, and then when time comes to do your taxes, you will get a 1099 from Cindy and Genty and Co. No later than the January 31st deadline. So that 1099 will have all of your earnings that were paid out through the company. And you are an independent contractor, so you are responsible for, in essence, including that that income on your tax return on Schedule C. And so when a 1099 is completed, a copy goes to you. A copy goes to the IRS, so they know you have that income. And then all your expenses that you've compiled throughout the year are deducted from that income to give you a net self-employment income number. That is a number that is, taxed for federal purposes and for state purposes. And depending on where I think everyone lives in different locations, obviously. There are city taxes or sometimes there are school district taxes. And if you've been filing taxes at your location for, I would say, any period of time at all, you're going to know your situation as far as what tax you have to pay. So, for example, if you live in the city of Dublin, you owe 2% income or 2% income tax on all your net self-employment earnings. That tax, because of the 1099, there's no taxes taken out of a 1099. It is a gross. It's basically the number that you've been paid by Cindy and Jenny. There's no taxes taken out. So you would have to pay your federal income taxes on that gross amount, and state income taxes, and your city and or school district income taxes, and also payroll taxes, which is Social Security and Medicare. Now, I'm saying all these things, all these taxes you have to pay, and those would be the same taxes you would pay if you were getting a W-2 and that tax was withheld before you were paid. So you're not paying you're not paying additional taxes because of that. It's just being paid. It's just you have responsibility as an independent contractor to pay those yourself.
And Dave, when are those paid?
Well, there are quarterly tax payments that are due to the government. So what I tell folks that are self-employed and possibly, they're small business owners, and I would look at all of you as small business owners that are performing a service for compensation. You run your own, profit and loss statements because you have your own expenses and you manage those expenses. So there are quarterly payments due based on the earnings that you anticipate for the year and that quarter. And it's not a perfect science because we all don't know. You're not going to know on April 15th of next year how much money you're going to make for the entire year. So you would pay estimated taxes, that are due April 15th for the income that you earn for the first quarter of 2024. Now, I don't think this call is probably the right time to confuse everybody about how you calculate those payments and to go through all the ins and outs of those estimated payments. I'm happy to discuss it, but I don't want to, have this call be too kind of high level.
And I think that's probably appropriate. I think that just for everyone to know that quarterly taxes, is one of the requirements of being a 1099, and then they can, manage that on their own. I think that, Dave, would you circle back a little bit around to some of those deductions that you had talked about? I know that another one that you and I had talked about was the cell phone, and
Yeah.
that's key for all of these, for all of our employees, only because we are on our phone all the time. That is, so what portion of the cell phone bill, how do they figure out what portion they can write off of that?
Well, what I would say is obviously we're all probably on family plans. And so we don't have a cell phone that's just for our business. That would be impractical. So, pardon me. Excuse me. So I would say that it's it's one of those things where there's no right or wrong answer. The wrong answer is you can't write off your entire cell phone bill. So if you're part of a household where you have husband, yourself, kids on like I do and like Cindy does, and the entire bill is $300, it would be hard to justify being able to write off $300 and saying that's all for business. We know that's not. So I would say probably if you have 5 people on your plan and your bill is $300, then it would be appropriate to write off 1/5 of that, or $60.
Okay. What about, this is kind of far-fetched, but we do have to buy some clothes for crawling on the ground with kids. Isn't some of that considered in a sense a uniform? How does that?
Well, that's kind of a gray area, and I think that has been somewhat abused over the years, and so that window is pretty tight of what you
Okay.
can do. And it boils down to basically this: that unless you are wearing clothes as part of a uniform that you would only wear on your job, as a therapist, then you're not able to write off clothing.
Okay.
So, for example, if you guys required a uniform that was just for business that you wouldn't wear any other time, then that would make it more appropriate to write off. But I don't think that's the case, is it?
Right. Not really. Unless we wore scrubs. If we ever shifted to scrubs, that probably.
Yeah, and I guess the argument can be made you can wear scrubs for anything these days. So
Yeah.
I think it'd be more of a, if I'll give an example. If you worked for a well, let's say you had scrubs and you required everyone to have the name of the company, a patch on the scrubs, where it was kind of a uniform. That would be different than if it was just scrubs,
Yeah.
because you likely would not be wearing that for any other reason except when you were in your mode as a contractor for the company.
Right. Okay.
So I would just probably go with the expectation that clothing is not really on the table to write off at this point.
Okay.
Less.
Dave, I have a question, actually
Yeah.
two. What if I have a computer that I'm using to record my notes and I've already purchased it before I started working in this job? Is there anything I can do or no?
No. So one of the things about being a Schedule C contractor or self-employment person is you have to choose an accounting method, and you would all be cash method, which is it's really the only option that would make any sense for anybody on this call. And so you can only write off things that you purchase in that year that you are doing your taxes for. So
However,
if you bought it,
if you bought a new computer this year.
if you bought it this year, yes, absolutely. that is something you can write off. And again, there's some different rules on that of how you can do that. But most definitely, if it was purchased in, this year, and you started your contract, so to speak, or your employment this year, then you could definitely write off that.
Okay, thank you. And my second question is, so most contractors, in our business are not working 40 hours a week. So back to the standard potential home office deduction, is that based on a 40-hour work week? What if we're
No,
working part-time and someone else is using our office, for whatever?
well, I mean, I mean, I guess there's no
Don't tell
IRS,
anybody. Don't tell anybody.
no IRS agents on this call, is there?
Mhm.
There is, because technically, technically, that portion of your home should only be used for business purposes. But it's again, it's not a area I'd have concern with, as far as, are you breaking the law? Or no, it's common sense. You gotta have a place to do your paperwork, do whatever you're doing, prior to your trips out to the schools or daycares, whatever you guys go for your sessions. It's not you know inappropriate to expense home office, even if it might have another potential purpose.
Okay, good.
Okay, thank you.
Anyone else? Other questions?
I have a question about if you're working 2 jobs in a day. I thought I had heard like to record if you're going from, like, a lot of us work at schools and then go afterwards to see McKibben and Monty clients. Should we be recording that as well?
Yes. So any time you are driving for a business related purpose, so obviously going to see clients or going to schools, from point A to point B, from point B to point C, and point C back to point A, that's all deductible.
So Dave, I think what Kirsty's asking, so they often work for schools, like they work for a school system as their full-time job, and then
Okay,
they work for us after hours. So that was probably a little confusing to you.
that's different then.
So what portion can they write off?
So if you have a full-time job at a school and you go there every day, then you're not able to deduct your commute to your job. Okay. I guess I was under the impression that everybody kind of worked out of their home, as and not had a full-time job where you had a commute. So if you have a commute, so you work at a school, doesn't matter how far away it is. If it's 5 miles away, you cannot deduct the 5 miles to the school and the 5 miles back home from any location that you go. So let's say you go, to the school, put your time in. It's not like it's prison, right?
Mhm.
And then you go, to visit, client. You can deduct that mileage to the client, and then, I mean, technically you can't deduct all the mileage back home, because that would be the back end of your commute. But I would say you could deduct anything but the last 5 miles of that. So let's just say that you went to had a 5 mile commute to school, then you had a 20-mile commute somewhere else, and then 25 miles home. You could deduct the 20 miles from the school to the client, and the first 20 miles of that return trip. and not the last 5, because that would be deemed the, you know, the commute home.
Good, that helps.
Does that make sense?
Yeah, thank you.
Yeah, it's all about keeping meticulous records of everywhere you go. I would just advise everybody, as part of your repertoire when you're in your car, you know, stop and get your coffee first. Then, you know, make sure you've got you know, your app going, and I don't know how those apps work, so I don't use one myself. I do mine the old fashioned way. I have a log that I do, that I keep. I guess it's paper. Don't tell anybody, but I use paper for stuff. But just be meticulous about that, because again, I have a lot of tax clients that, you know, kind of give me, they tell me, well, I drove 382 miles this year, this month, and 400 next month. I'm like, that's fine, but you have to be the one who answers to the IRS if they come knock on your door of that mileage. Not me. It's going to be you. So sure, I'm not gonna make everybody give me every detail, but I prefer it, and I'm going to be reasonable if somebody doesn't have all the detail, you know, because I have to make sure I'm, reasonable what I do for somebody doing returns. So again, I know that some of this is very meticulous, but that's part of the, I guess, cost of the benefit of writing off your mileage, which for most of you, that will probably be the biggest expense that you can write off. Because 65.5 cents, racks up pretty quickly if you do it every day and you're driving a lot. And again, the goal is to, keep track of those expenses as much as you can. And then obviously your goal is to reduce the taxable income you have as a self-employed person.
Good. Megan, I think you're on mute maybe. Oh, no, can't hear you there. Is it on the bottom?
You're unmuting, but we can't hear you for some reason. Do you want to type in the chat what your question is?
Actually, while she's doing that, I would like to add one thing, that as far as the tax return, for those of you who have not done or had to complete a Schedule C as part of your 1040 return, one thing that seems to be misleading to some people is, if I have a full-time job, can I also have a self-employment job? And the answer is yes. You can, so you'll have your W-2 wages, and you'll also have your self-employment earnings, which are two separate things on your tax return. Sometimes that's confusing to people.
How you doing, Megan? Anybody else while Megan's typing in her little chat?
I have a question while she's typing about the best way to pay quarterly estimates, or the most efficient way, easiest way.
The best way to do it. Good question. I would say to have accounts set up at the IRS, and that's irs.gov. If again, it is every single taxpayer, every single Social Security number out there, you're going to have an account at the IRS, whether you know it or not. And the way to access that account is go to irs.gov. And you got to, do some goofy things with this ID and me stuff. And, take a picture of yourself and upload it to the IRS and blah, blah, blah. But it seems like a terrible process. It takes about 10 minutes. But you can pay your estimated taxes online then. It's like paying your cell phone bill online. It's like paying anything online. So that is the most efficient way to pay your quarterly taxes, is to go, log into your site and, make a bank payment, directly to the IRS. And the state of Ohio does the same thing. And pretty much all municipalities will have some way to pay online. Or if that's not your thing, if you want to go through that process, if it seems overwhelming, and then you can do it the old-fashioned way and just write checks to the IRS, to the state, and to the cities each quarter based on that previous quarter's income.
Right.
Okay.
And
Thank you.
the only difference, so one thing I'd ask everyone to write down, if you're able to, that is sort of the goofy thing about estimated taxes, is I say that they're payable quarterly, but it's not based on a calendar quarter. It's really a goofy setup. So let me give you the dates that quarterly tax payments are due, just so you know. It's April 15th. It's June 15th, September 15th, and then January 15th of the following year. So as you can see there, it's kind of a weird kind of roadmap for paying quarterly taxes.
Mm-hmm.
And, to figure out how much you owe, that's more of a crapshoot. It's something you'd have to talk to your, tax preparer, or the person who, figures out all that stuff, whether it's you or your husband or somebody else, or preparer, because what you pay it's not just based on your income. It's based on, the income of the household. So if let's just say, I think everyone on here is female, correct?
Yes.
Okay. I don't got to turn on saying stuff, but so let's say your husbands or significant others have substantial income and you filed jointly. So your income, your net income that you would be earning, is going to be taxed at your joint tax rate, which would be high because of your household income would be very high and be in a, let's say a higher tax bracket than if you were, let's say the opposite. Let's say, there is no other income and it's just your income. Then what you pay in quarterly taxes is just based on what you're going to expect to earn for the year. And that would be a lower rate than, I guess scenario one. So it's hard to say. It's really hard to give somebody a rule of thumb on the calculation because it's based on your household income.
Dave, can I, that was helpful. Can I shift to a couple of questions that have come up just in lieu of time? Megan's question was, what about a 5-year licensure that was required for both a W-2 job and this 1099 job? It wasn't paid this year, but would have been if I didn't already have it. How do we, what portion, can she write off a portion of that or?
No, because it's based on when you pay for it.
Okay.
So to
Unfortunately.
clarify, if she did get that licensure this year, like had to renew that licensure this year, then she could write it off.
She could write off the entire thing, yeah.
Okay. Thanks.
Next one. Oh, sorry, Leah. Didn't mean to interrupt you.
So that would be as if, let's say you had a gig at the end of the year and, I don't know how you guys submit time or bill, whatever. I don't know how that works, but let's say that you had you had money that was owed to you, that was incurred at the end of the year, but you weren't paid that until, let's say, January. So let's say you did a gig or, you were doing things at the end of the year, but not actually got paid until January, then that income would not be subject to tax until the following year because it was not received in the same year as it was incurred. It doesn't matter when it was incurred, it's when it was paid.
Okay.
So just know, sort of cash is king, and just as long as something was incurred and paid, it was paid that year, it doesn't have to be incurred that year, just paid that year.
Good to know. So that would apply for all of our December services that you're going to be paid in January. So.
Yep. So that would be, so your 1099, they would receive would be for, payments that were received in 2023.
Okay.
So you always have some overlap on, on services performed and payment received, and just know that's not when they're performed, it's when the cash is received. That will work itself out over time as as years roll into other years. You're going to get paid.
Mhm.
That income will show up at some point.
Great. Okay, how about another one, Dave? So another question was, my husband and I currently use TurboTax to file taxes. I am new to McKibben and Monty, and I'm also a W-2 employee part-time at a larger institution. Is something like TurboTax to file taxes as a 1099 sensitive enough to capture all of the deductions, or would you recommend something different?
Well, I guess I'm a tax preparer, so I spend half my time fixing problems that occur from TurboTax. It doesn't mean you can't do it on TurboTax. I think sometimes, the downfall of TurboTax is you have to know what questions that they're wanting to find out, versus a tax preparer will tell you what you need to do. So again, I'm not saying you couldn't or you shouldn't, but just know that there's, it gets a little bit more complicated when you start to have self-employment income. What I find more than anything, with TurboTax and kind of those tax services, there's some other ones out there, is more times than not, you leave money on the table because TurboTax doesn't know the questions to ask you. And then again, so I'm not saying you can't do it or you shouldn't do it. It's just, you have to be more aware, probably have more knowledge yourself going into what you need to do for a Schedule C.
Helpful.
I hope that answers your question. I guess I'm a guy who's a tax preparer, so when you start getting into self-employment income, that's when I would think seriously about, having somebody pay your taxes for you.
Good answer. Other questions? Okay,
I have another
Yeah.
short topic,
great.
and that is one of the things we didn't talk about, which is a benefit of being self-employed is, and something we didn't touch on, it's the ability to make retirement plan contributions. Because part of why we're all doing this is we want to build for our retirement, right? So, so as a self-employed person, you don't lose the ability to make retirement contributions like you may have been used to if you work for a company that has a 401k. Or if you're by chance a teacher, the state teacher retirement or whatever it might be. So there are opportunities to make self-employment retirement contributions, and there's a couple different ways to do that, but I just want to let you know that that is a benefit of being self-employed, that you can make retirement plan contributions and basically deduct that from your taxes to reduce your income, which reduces your taxes. So that's for another day, another time. That's where you need more of a somebody who understands your options, but just know there are options. There's what's called a SEP IRA, which is a simplified employee pension. So self-employed people are able to deduct up to 20% of your net self-employment earnings and make a contribution to a SEP IRA. And it's one of those things where if you are, let's say, in retirement savings mode, it's a great deal.
Super. Thank you for mentioning that.
Yeah, I would just not discount that as something to think about, because most people don't think about that part of the self-employment animal outside of just the income and expenses. The retirement plan contributions are, let's just say, a very advantageous thing to do when you're self-employed.
Right. Thank you.
You're welcome.
Okay, well, if there's no other points on Dave's, thanks. I think that really helped Dave a lot to understand, at least. I thought that was great, and hopefully gave everybody some things to think about. And maybe your Christmas presents are all going to be a journal, so you can keep track of your mileage. But thanks, Dave, so much. I hope this was helpful for everyone, and thanks for giving us your time tonight, Dave.
Sure thing, no problem.
Thank you so much.
Okay.
Take care. Bye.
Take care.
Thank you.
Bye-bye.
Thank you.
Thanks, everyone.
I'll shut this off now.